Good morning, good afternoon, everyone. Russ is here, and today, as you can see, guys, on my vacations, I still wanted to give you an update of what is going to happen in the markets because, on one hand side, we had the PCE data coming out. On the other side, GDP month over month has also been released, and both are the data within the forecast value. So, markets reacted quite well. I think for the next months we have to be very cautious, and I'll explain today why. Please stay tuned. One thing that I want to highlight, we're not gonna be at the mercy of the market. We're gonna do two trades in the later part of the video today that would give us a macro protection and macro hedge in case the CPI and PPI would come bad. And I think there is quite a high probability for that because oil has been pumping significantly, and that puts the entire market in unrest. The unemployment claims this week came quite low, moderated so far. The scenario where the recession is being feared is postponed. So Jerome Powell probably would not be blamed in saying that he is behind the cuts because his very hawkish policy has actually caused the businesses to slow down. This is yet not the narrative. On the other side, we still need to give a lot of attention to these unemployment claims on a week by week basis. And what I would do next week, on Friday, we're gonna have a very interesting show because I would have a birthday, and actually I decided to make a review of my favorite book. And on Wednesday, we're going to talk about those unemployment claims and other macro data a little bit more. So for now, let's start. What I would like to do today, I'd like to go, of course, through Bitcoin, Ethereum to BTC chart, Ethereum itself. Very important that we also discuss Euro dollar. If we have chance and opportunity, I would love to also jump a little bit into commodities. We might be a bit out of time for that, but gold to silver, just for you to let you know, I think might have been retesting this previous range low. So I see silver is going to do well. Our miners are going to do well. We might still have a couple of corrections towards downside, 28, or the low is $26, but the upside at $40 is so much higher that I'm completely not worried. USDT dominance might actually also signify the little resistance here, but we'll cover it more in details when we're gonna look into DXY. DXY here is giving me a little bit of a hard times, and it's looking quite bullish. With all that said, let's start. First of all, I would like to start with Euro USD chart because the zones of support and resistance or supply and demand that you are seeing in front of you on the screen has been here since months, and so far we are holding them quite confidently. If we would consider that little deviation here, let's probably highlight it in the red color as something like manipulation or point of three. For those who is watching my streams quite often, you guys would know that those situations when we are losing the range can actually indicate the certain traps for a lot of breakdown or breakout traders, especially since there are many of them in Forex. So as soon as we are back into this range and we're holding it quite confidently, I would say that the monthly closure that is happening within the next couple of days can bring the breather for the risk on assets, including Bitcoin. And if Euro to USD is able to close within that range of 1,07, then I would say that that could also give a certain breather to Bitcoin, and we might not accept below $60,000 and start actually consolidating towards the mid range. But once again, coming back to Euro USD, I think for now this trend is rather up than down, and that means that DXY here would give us potentially an opportunity to accept below that line of 105.9. Same thing, same idea. This line has been here for months already, and my game plan didn't change. Well, if you're gonna ask me actually what's gonna happen with DXY in the long run, Russ, and that's not a simple question. Fundamentally speaking, before Federal Reserve cuts the interest rates, obviously it's much more prosperous for international investors and for capitals to be allocated in US dollar, even if you would look like on any broker, for example, Interactive Brokers, the commission they're paying in US dollars is roughly 4.83, and in euro it's short of 4%. So obviously people would consider having their money in US dollars, right? And that puts significant pressure on the risk on assets, and it pushes DXY up. So if we're gonna look at DXY on the higher time frame, from the Elliott wave perspective, I can see something like that. So we had our 5 waves on the way down, and now we had this A, B, C correction, which is pretty much over by now. So let's just mark that as A, B, C. And now we're gonna have something like 5 ways continuation on the way down, and it's how it's gonna play. Something like that is very possible actually for DXY, and we might close below 100. To actually highlight the scenario from the short-term perspective, we can see how on the hourly time frame, for instance, we are printing multiple bearish divergences one after another. If you would just simply see how the price or DXY index itself has been evolving here, constantly printing higher highs with divergent RSI, which are printing actually lower highs on all that uptrend move. Or someone would just say, oh, well, I see this bearish wedge, so as soon as we lose the wedge, we will start accept here. So yes, I would say that's pretty much a possibility right now. But on the other hand side, I guess no one knows if actually US dollar has printed the ICL or intercycle low here, if we're actually gonna go below 104 or not. Because for now, please keep in mind that on the daily, we're still in the clear bullish market structure. As soon as we have broken those highs here, we've been still in quite a sustainable uptrend. Apologize for many lines. Now I'm gonna clean the chart so you see that better. And as you can see here, that's probably a little bit too early to be bearish on the DXY just yet. Of course, Elliott wave theory and others are helping you to predict or to outline the potential scenarios of what can happen. But looking simply on what we see in front of our eyes, there is nothing bearish here. That is clearly a bullish move. As I said, we can anticipate the acceptance below 105.9 and then the breather for the risk on assets. Speaking of which, if I gonna look on the Bitcoin low time frame on the hourly, I can see that absolutely I am not curious yet to go long. Why? Well, simply because we cannot accept above those highs and we are constantly bouncing from them as from resistance. So what can happen here? Either we chop and consolidate here and then starting to accept, and then of course I would be happy to consider that our range low has been held, and the next move up would be TP1 65,100, TP2 71,000, or we start to accept lower. I'm coming back to 1 hour time frames, and we start reclaiming all of that liquidity that has been sitting in the week and maybe even swiping that week lower. In that case, I would consider waiting and allowing Bitcoin price to accept first, and on the confirmation of that acceptance, I would go long. Nevertheless, I would consider a long position here. Let's highlight how I might go long at the level of around 60,000, assuming that the range that we had here would hold and the stop loss slightly below the week, let's say 58,200. And then of course, as I mentioned, TP1 and TP2 on the chart, you can of course take partial profits. But as I said, and as I keep saying, more often than not, the ranges are being respected. And this is a good exercise and a good reminder for yourself to keep following the range until it's broken. So even if we're not going to go to the TP2, which I indicated around 71,000, it is still fine to play the bounce from the lower part of the range. Of course, I don't want to repeat that none of those Bitcoin moves came as a surprise to us, because I have been quite bearish here on the top of the range, and it's normal because, as I said, 80% of time the ranges are respected. And when everyone was speaking of breakout, I was making a video to you guys saying that Bitcoin would go at least to 63,000 or maybe lower. I was speaking of 63, expecting probably the front run about that levels, but obviously I was understanding that we can all the way go also to the lower part of the range. And for now we are holding it, so there's no point again to predict the breakdown. Please respect the ranges until they're broken. Do not try to predict those moves. Now, let's have a look on Ethereum to Bitcoin chart. Ethereum to Bitcoin chart looks relatively bullish, but it also feels to me that this move is getting a little bit exhausted since we are here at the resistance. When I look on Ethereum itself, I see that this huge zone of liquidity that has to be reclaimed, which is surrounding that fair value gap, a huge fair value gap. Let's highlight it with our rectangle here. All that zone, anything from here to here, still holds a lot of liquidity that market would like to retest. So we might see a few more swipes down here into that zone. But as I said, guys, I am adding as much as I can between 3,000, 3,100 and the current levels. I think, as I mentioned to you on last Friday, there is a great probability to dollar cost average at those levels. Why? Well, also because if I am going to the coin analyze and I'm seeing how currently the opening interest and the cumulative volume delta are behaving, then I am seeing quite a strong bid on Ethereum. This blue line, this positive cumulative volume delta, it seems like there is a certain TWAP. So most of that move down that we had, for example, for the last 1.5 to 2 hours has been driven purely by perpetuals, by future contracts. You see that red huge drop in here, which probably was the number of liquidations that market maker want to cause prior to recovering his position up. I'm not saying it's gonna happen straight from here, but I'm very happy to see how spot have been holding and continuously accumulating on whatever price point Ethereum would provide. So despite Ethereum to Bitcoin is not looking extremely bullish, I am still focusing here more on Ethereum, also due to the narrative of Ethereum ETF launch and the potential start of its trading in July. So yeah, let's probably outline it in a simple trade. Well, for me, it is relatively straightforward here. Why so? Because you remember last time we discussed this ability for that internal range to form, the one that you are seeing right now highlighted with those yellow lines. So as soon as we start accepting here, or as soon as we are holding this yellow line of 3,350, I am happy to go long. And in this case, either on acceptance into this minor range, and in that case my stop loss will be below those weeks, and I would target 1 the upper band, target 2 the red cross that you see from the last video, or alternatively, if we are not able to reclaim that range, then I would like to go long here. Very similar idea, just keep your stop loss in that case below the previous week. And then you can target 1, 3,660, target 2, 4,100. Very simple. And only then, if those both trades are being invalidated, then you can actually long that red rectangle here. All this fair value gap liquidity. People were asking me in our Telegram group in the comments, why those fair value gaps, giving me any information about the fact that market needs to come there. Well, it's very simple from the auction market theory perspective. Market does not like inefficiencies. It wants to come back to the zone of inefficiencies and to resolve them. What does it mean? It means that a lot of participants did not have enough of time to actually agree and transact around those prices. The price kind of went too quick through that zone. It was not enough transactions, and so called single prints have been formed, where time price opportunity of a particular asset has only been printed once for instance. So we don't really know if it's a fair price or not, and for that reason, market would like to re-verify what participants think of that price. So market always comes to those zones, market always comes to fair value gaps, and that's normal, and that's exactly how the auctions are being formed. What is also possible is, in case you're fundamentally bullish on Ethereum, to combine those three trades into one and to do something similar what I'm doing. For example, on Bybit, I accumulating the orders with the little difference that I explained last Friday. You can actually do it automatically. So yeah, I'm purchasing the number of Ethereum at every, let's say, $5 or $10 increment in price, and accumulating, knowing that, for example, when all the Ethereum filled between 3,000 and 3,400, I would be allocated on 1x, for instance. And if for a certain reason price goes lower, then I can cut it and break even. And why break even? Well, because I'm not buying everything here right now, and with price going more down, I'm adding lower. So as soon as we would have like a tiny little bounce, I can also close it at zero if I see that on a lower time frame we are not able to accept. But of course, it's only for people who are feeling quite confident with futures. I remind you once again that you can also trade futures without any leverage, simply because it allows you easier entries in the position, as I explained right now, with those automated entries. When you can regulate the size and how far positions are separated. On the other hand, if you are a purely spot trader and you want, for example, to hold your positions for multiple years, so you don't want to have any funding, etc., then I still would recommend you using stop loss and take profit. And the reason why I have chosen actually Bybit out of many exchanges, I guess like among the major ones, I used all, at least 10 different ones, is the fact that I can create take profit and stop loss on the spot buy order. That's really, really cool, because I can basically decide the limit where I would like to enter. For example, 60,000, let's say $10 to slightly front run 60,000. But on the other hand side, I am also, as emphasized 5 minutes ago, I'd like to have the stop loss being triggered at exactly 58,000. So I can also decide the trigger price and the price at which I would exit that trigger. And I would, for example, purchase here a certain amount, let's say around 2 Bitcoins at that price. And I can also decide to take profit, for example, at 71,000 at the market price, right? So this is something that personally I think is a huge game changer, because a lot of platforms are not allowing to set up the same rules that you can use on perpetual futures over spot. So for me, it's it's quite incredible, to be honest, that you do not have to sacrifice any of the functionalities independently if you're trading spot and futures. So for those reasons, we in DataDash discussed a partnership with Bybit, and they are providing right now the free trade of $500 if you register with a promo code that I'm gonna put down in the comment section below. That's actually one of the users wrote me last time in a comment that he didn't receive it, so I reached out to Bybit and he received that bonus. You have to just do 3 simple steps. Click on the link, and then you sign up with your details. You go to campaign page, you claim that task, and then you complete the task and make a deposit. Like the minimum deposit is $100, right? So for me, it's still good to start trading, even if it's going to be a learning curve. Even if it's the $100 trade, it doesn't matter, because the good risk management rules should not start with like trading, your entire net worth. It should actually start with trading $1,000 or $500. So for me, it's very important that you actually start everything that we discussed last time with the strict risk management, with protecting your capital, with increasing and so on, not with the FOBA size position. I don't want any of you guys to lose money, but keep track and start with those $100 or $500 that Binance is going to provide you in this free trade, and then increasing your stack slow by slow, and maybe within a month or two you're already at $1,000 from that 500 trade that you start with. And so yeah, the reason I'm showing all that is not because I want like everyone to run and make as much money as you can, because I just want for us to start practicing healthy risk management. When I mentioned that we're not going to be at the mercy of the market and we're going to do smart things in order to protect ourselves, I meant obviously oil. You know that increasing prices in oil put a huge pressure on inflation and overall on the stock prices as well as the economy, because on one hand side the prices are ramping up simply because oil is the part of the logistics. On the other hand side, the purchasing behavior of the consumers, thanks to the increasing cost structure, is being tested. In our Telegram private group, I illustrated that USO, United States Oil Fund, has made this tremendous run of 10% within 10 days. But for instance, VanEck Oil Services ETF was lagging, and that's why around 295 we went long in the Telegram group, 7% from there. For everyone who was heard last time, I said that we would like to have the group capped with 1,000 participants. So if you are not yet in, I recommend you to subscribe, because everything that I'm providing for now, it is free addition to the newsletter, which is roughly $1 per day. So in my opinion, this is the good value. Please consider if you want to have then access to my alerts. Another trade that I would consider doing here is XLE, which is the Select Sector Fund Energy. You can see that we are also gonna soon break out of this falling wedge, and in my opinion, that trade, of course, in a group we entered earlier into OIH, but here I think it still provides a nice opportunity for 8% move just to rake up those highs. So please consider those two trades in case tech would correct. Oil and oil-related energy funds, in my opinion, would do well. So I'm looking here on OIH at another 7% move, which is quite good considering the size of my position. I will be very happy for that to manifest. What I am actually doing on top of primarily buying the shares, I am selling cash secured puts. To be honest, I wanted to do the special explanation today of how to make money selling cash put contracts, but then I realized it's gonna take us at least half an hour, so please let's postpone it for next week. And I would love all our YouTube viewers to start utilizing that strategy. I, for example, sold a bunch of $290 puts. So as soon as price stays above 290, I'm gonna collect the premium, let's say $5. But as soon as the price would close below 290, which is actually quite unlikely, I would be forced to buy it at 285. Why 285? Because it's 290 minus 5 that I collect inevitably. So in that case, my cost of ownership would be only 285, which is below the market. So I'm actually able to purchase things cheaper than everyone else. Isn't that beautiful? And that is something I like already to give you as idea for the next video, and then I will explain into details which strike prices to take and also which durations for the options to choose. Sometimes you want to be assigned, sometimes you just want to collect the premium, and that is why there are two different strategies. Guys, the most beautiful thing is when you are assigned and your cost of ownership is 285, which is below the market. On top of that, you can sell the call contract, so you're basically selling the call contract and collecting another $5 premium for price not going, let's say, above $340. And in that case, your cost of ownership becomes not 285, it is already 280. And then you can do this again and again and again, and this is called wheel strategy. So wheel strategy is something that unfortunately a lot of traders, especially those one who started with crypto, they are not able to take advantage of those. That's why I would love to teach you all how those things work, especially for those who are also considering investing in the stock market. And this is how the big guys, funds, and institutions are trading. So I want to give you an ability to act as the large funds would do. For those reasons, please stay tuned, and we're gonna cover those strategy over the next few videos in more details. With that said, guys, I wish you all an amazing continuation of the week, a beautiful weekend. Please hug the loved ones, take care of your family, much love, and I see you soon. Bye.